So for the last 18 months, you've closed on 500 doors.
I love real estate. More importantly, I believe that I've developed a network that I can go and raise large amounts of capital to acquire these assets. When you can go and get door after door slammed in your face and go and find some success, it just instills a confidence in you. When you can experience flash floods of capital, I think it inspires you to go and chase that a little bit more.
The energy, the attitude of the people that are in the home service industry is totally different than the real estate industry from what I've experienced so far.
I think it's getting more and more popular, especially in my world, to go acquire these home service companies. If you do it right, they can be this really great cash cow.
Welcome back to another episode of the Austin Zaback Show. Today, we've got James McCabe on the show. I just did his show not too long ago. Definitely go listen to that if you haven't already. We'll link that down below. But James is the host of A Million Ways to Make $1 Million, which I love the name of that podcast because there really are a million ways to make $1 million, maybe even more than that. But a phenomenal show, James, that you have. You know, we were just talking about that a little bit before the show. James has also, in the last 18 months, acquired over 500 doors, okay? So if you're a real estate guy or gal, this podcast will definitely be for you. Make sure you're somewhere where you can listen to the entire thing. He actually helped raise capital for a lot of you that live in Arizona might be familiar with the Cannon Beach that they just opened. He was one of the large contributors to getting that to where it is today in terms of capital. And he was also one of the largest or the largest investor in Green Mango Pest Control. For those of you guys that have been following me for a long time, you guys have seen that I had Cameron Bodden on the podcast multiple times. We even did a business tour with Cameron, and then obviously coconut cleaning he's a part of as well. So James was a big part of that. And he's invested in over a dozen other companies and also is the founder of the Placement Fund. And James, dude, I appreciate you being on the show, man, and I'm excited to dive on into it.
I'm as well.
Yeah.
I enjoyed our conversation over on my platform as much as any, and I feel like you're a wealth of knowledge. So thanks for having me. I appreciate it.
Of course, and you're getting a little bit better. When I was on your podcast, you were all wrapped up, and you just had knee surgery, and now you're moving along.
We're ready.
Yeah,
we're ahead of schedule. We're feeling good.
Heck yeah, man. Well, let's just do this. Let's dive back a little bit and figure out, how did you actually get to, what was the first kind of entrepreneurial venture that you embarked on? Obviously, you've done a lot, right? And you're a big real estate guy. The Placement Fund, I pulled up that on the computer this morning. I was kind of looking through that. What was that first venture that got you into entrepreneurship?
Door-to-door sales. I'll attribute that. I don't know if that answers your question from an entrepreneurial standpoint, but when you can go and get door after door slammed in your face and go and find some success, man, it just instills a confidence in you. And there's really high earning potential in that. And so when you can experience, flash floods of capital or something like that, I think it inspires you to go and chase that a little bit more.
Yeah.
But I'd say that there was a real estate niche that I think that you'll appreciate. This is where I really stepped out onto my own. Is that in the crash, you could buy real estate for pennies on the dollar. Well, we found a niche that you could buy real estate inside of qualified funds. So I had a friend that owned an investment company. He was a registered investment advisor. And you know what they went through in 2008. All their clients, they lost maybe half their portfolio in a relatively short amount of time. And they were not exactly excited about entering into new holdings inside of the stock market.
Sure.
Well, we provided a service to them where we went and bought homes. We renovated them. We put them under property management care. And then we sold them as performing assets into qualified funds.
Wow.
And so they could take their 401ks or former 401ks, they could self-direct them. They could buy this piece of real estate. And now those rents would go towards their retirement, plus they owned the asset.
Wow.
And they buy the asset free and clear. And then whatever appreciation happens since then, you know that if you bought a house in the early teens.
Should have bought everything.
Yeah, right. And so we did as much as possible.
Yeah.
It was amazing. We knew it was a wave though, right? Because we could offer these, 12% returns, 16% returns, and we knew that wouldn't last forever. So we made the best of it while it did. But that was probably my first journey. We were buying houses out of state and putting all that together, selling them quickly, but it was a really fun time.
When you were doing the door-to-door, what were you selling?
Pest control.
Pest control.
Yeah.
No
and then
way.
I did a little bit of alarms too, but
Okay.
but pest control I feel is like where my fondest memories were.
Like what company? Like how did that even come to be? Like who hired you?
Yeah, you want a full circle moment?
Sure.
One of my favorite investments I'm in right now is the guy that recruited me to sell for his first branch that he ever opened up on his own. Yeah, so Moxie Pest Control. And now he's one of my best friends in the world. His name's Mike Fleming. And we opened up his first branch out in California. And it was one of my favorite summers. Like some of my best memories, great friends from that time in my life still,
That's super cool. Are they pretty big now?
Man, I don't want to like misquote, but I feel really confident in saying that Moxie as a whole has over $1 billion valuation, I'd imagine now.
That is awesome.
Yeah, huge
How many
branches
markets?
across the...
roughly.
I would.
They're all
I would
over?
imagine they're at least in over half the United States. Yeah, I'd have to fact check that, but like I'd be really surprised if they weren't at least in 25 different states. Yeah.
Dang. Yeah. No, it's super cool. I know that we talked a little bit about on your show about my new venture that I'm starting. So now I'm like fascinated to know, all the home service guys, and I've been meeting a lot of really cool people. Home service is a very, and we'll dive into it in the podcast, but from what I've found, even over the last like month or two, the demographic, the energy, the attitude of the people that are in the home service industry is totally different than the real estate industry. Like it's like 180 from what I've experienced so far. Like in real estate, it's a dog eat dog world. Nobody wants to help anybody. It's like you're on your freaking own. Like screw you. Like, it's kind of a crazy, like just like cutthroat industry, where so far from what I've seen in home services is like it's a way more abundant mindset. Like everybody is down to help everybody. Like, hey, I'll show you how to do whatever you need to know how to do, like type of thing, which is really refreshing, honestly. And from what I've seen, I don't know if you've seen that.
Well, I think it's getting more and more popular, especially in my world, to go acquire these home service companies.
Yeah.
Well, why would it be attractive to acquire them? Well, because if you do it right, they can be this really great cash cow.
Mm-hmm.
And so you'll get these founders that have found a way to provide a service, and they're making really great money.
Yeah.
And I think that there's a common theme that I don't know the best way to phrase this. You might have heard a quote where it's like you very rarely get arrows shot at you down.
Yeah.
And
right.
so
That's true.
When you've made it, and we have a mutual friend, Cam, from there, it's like when you go and make it, like you want others to succeed. You don't have this scarcity mindset around, oh man, if I teach them this, then my company's going to shrink and we're not going to grow. There's so many homes, there's so many customers, and I think that there's something about a karma that of just giving back. And not to say that there's not really successful people in real estate. Like obviously there are, but man, it's almost like just like good old boys, in the home service industry. Like they might occur for themselves as, a non-college graduate, humble beginnings, and they went out and figured a way to make it through hard work and some street smarts, and now it's their turn to give back.
It's crazy, man. I read the other day, I don't know if it included like townhomes and condos and stuff, but there's 3 million houses in the state of Arizona. Now, it might have included like townhomes and condos, but let's just assume it's all houses. That's a lot of houses. When you look at the number, Cameron said on the show that he had roughly 30,000 customers when he sold, right? So, if you do that math, I did that math because I was curious. He had 0.01% of the market share in just Arizona, and it was a 9-figure, company, right? Yeah. So, I mean, pretty crazy.
One of the largest, if not the privately owned pest control companies in the state.
Yeah. At 0.01% market share.
And he wants to like gatekeep, how we optimize our routes or got efficient or why we branded the way we do. It's like, stop. Like, and that's, I think that where he's giving back, like with the 1% Club, is encouraging other people that there's strength in community and collaboration and, those kind of things there. So
I agree.
There's no surprise that he's experiencing the success that he has, and he's just willing to give back because he's operationally minded. And so when you can give those secrets back, you're not as worried. A salesman might be like, no, like anything I give to you is taken away from me. It's like, no, he's an operations guy, and it's like, let me show you how I've, through efficiency, through consistency, through discipline, all that kind of stuff. Let me show you how we got to be. I mean, their margins are crazy. Like from a comparative to other pest control, the way that they were able to increase their EBITDA amongst anything I've ever seen has been amazing.
Yeah. No, super cool. Yeah, with termite and all the different stuff that they were able to do. Really cool. Hey guys, we'll get right back to the video. So my company, One Roof Real Estate, actually brings cash buyers to wholesalers all the time that don't have one. So if you're a wholesaler struggling to sell your deal, make sure you go to my website, oneroofrealestate.com, and submit your property, and I will bring you a cash buyer. And if you're a cash buyer looking to get added to our VIP buyers list, you can also go to the website as well. Let's just go ahead and get back to the video. So why real estate? Like why, you go from door knocking and pest control, right, to now obviously you're kind of a big real estate guy. What happened there? Like why, how come, like, were you passionate about real estate? Was it just one of those things where you're like, like how did that kind of come to be?
Yeah, everything was designed to go towards real estate.
Mm-hmm.
I would only go knock on a door in hopes to increase or start some form of a real estate company or buy that. So I'd already had my first rental at that point.
Okay.
So I bought my first rental property when I was 19. The only reason I did that is because my dad was a real estate guy.
Oh, got it. Okay.
Yeah, so he had a service company, he had a restoration company, and he got it to a certain point, and he did it the old school way. Him and my mom, the first year that they got married, they bought a house,
Mm-hmm.
and then they moved every year for their first 5 years of marriage and kept the house. And then over a course of 25 years, he just built up a real estate portfolio through rental properties. And then he sold that company and bought a few more. And from the time I was around 6 years old, I was adopted into this family.
Okay.
And one of my earliest memories is my dad converting my oldest sister's room into his home office,
Mm-hmm.
and he was just around.
Wow.
But I was child labor. Like ever since I could remember, I was putting together fans or changing locks or painting cabinets or
Mm-hmm.
whatever it may be, because he self-managed his whole portfolio.
Wow.
And that's what kept him busy. And so there was this period of, I came home from school. It was my junior year of high school. Oh, no, I apologize because I remember the teacher. It was my senior year of high school, and the paper was, what do you want to be when you grow up?
Mm-hmm.
And my dad said, hey, can we talk about this? And I said, sure. And the paper wasn't very long. And essentially it said, I want to take over the family business.
Right.
And there was this, like, you've ever felt when someone's laughing at you and not with you?
Yeah.
He laughed at me. He's like, listen, there's nothing to take over. Like, this is what I built for your mom and I.
Yeah.
But I think I hear what you're saying.
Mm-hmm.
I think that you want to learn how to do what I did.
Mm-hmm.
And he just started grooming me right then and there. He gave me a loan, plus with the money I had, we went and got a dealer's license.
Mm-hmm.
And he said, I want you to learn the principle of buying something at a discount, increasing its value through some sort of, like what you would do with a flip.
Sure.
Right? Fixing it up and selling it for a profit.
Mm-hmm.
And we did it in cars, and I started flipping cars, and that's how I bought my first rental property. But it was because my dad groomed me, and
Sure.
everything. It was always the goal to be like him. And so, yeah.
So cool.
That started when I was about 17.
That's awesome. And that first rental, do you still own it?
No,
No.
but my wife wants to.
Uh-huh.
Again, it's close by in the heart of Gilbert.
Yeah.
And man, you want like a rental story. Bought it for $236,000. 2 years later, it appraised for $103,000. And luckily we had good tenants that went through. And then when my wife and I got married, we created like we didn't renew the lease with there, and we moved into that, and that was our first home together.
Yeah.
And then the second it got back up, I mean, I think we sold it for $240,000.
Wow.
Yeah. Years later, but
Have you kept an eye on it?
Oh, always.
Yeah. For sure.
Yeah, we'll go.
If it goes back active.
Date night.
Yeah.
Yeah, we'll go through. We sold it to some friends who had it for a little while, and we didn't know they were going to sell it. But they killed it. They bought it. I think they sold it for like $400,000.
Wow.
Yeah.
Good for them. Yeah. You didn't. I mean, all you had to do is just hold.
For sure.
If you held everything, bought everything in 2010, 11, 12, and just held, man.
My wife and I have a goal to buy everything that we've ever lived in. So
Yeah.
we lived in 2 apartment complexes when we first got married too. We moved to a different state.
Yeah.
And so our goal is to buy those apartment complexes
Wow.
and buy that rental. So those are on it. We kind of keep an eye on them.
That's super cool. Now, how do you go from residential real estate, right? Which I'm assuming your dad only did residential.
Yeah, he had a little stint where he bought some like what I would call low C level apartment complex in Central Mesa.
Mm-hmm.
That
Are we talking like a 4-unit, 8-unit, or like a big boy?
No, yeah, like a 40 unit plus.
Okay.
So if I remember right, at his peak, he had 90 doors.
Okay.
And a good chunk of that. And it was just more than he wanted to handle.
Mm-hmm.
And so that was like short-lived. I don't remember the details on it, if he lost on it, if he crushed on it, whatever it was. But there was a short stint where I just remember doing work at an apartment complex.
Okay.
This was when I was young too, like 10,
Yeah.
11 years old. Yeah.
You see a guy like Zach Keeps, right? You know him, I'm sure. Do you know Zach?
Oh, I do. I actually just met him recently.
Okay, cool.
Yeah.
Yeah, he's a good friend.
Okay.
He's been on my podcast like 3 times.
Okay.
You know, he has like 350 doors. He owns 80% of them in cash.
No way.
So it might even be 90% now. He has like 10% debt on the entire portfolio. So I want to say like 250 of the 350 he owns free and clear. And then like 100 of them, he has like 10 or 20% debt, right? So they're all single family, and he self-manages every door.
This is my dad.
Like,
just
that's
my dad
what
on
your dad
scale.
reminds me of.
Yeah. Like
you know?
he's just my dad on steroids. Yeah.
Yeah, it's pretty wild. You know, I talk to him all the time. I'm like, dude, like he has $100 million worth of real estate. You know,
I didn't know this.
What's that? He didn't know it?
No, I didn't know.
Oh,
this.
yeah.
You're telling me.
Yeah, it's crazy. No, you would never know. He's super humble, you know, but great guy, right? But your dad reminds me of him.
Yeah.
You know, just that self-managed, like, do-it-yourself kind of guy, you know? And it's really cool to see, right? So, but for you, what then, because I feel like now, you know, when I look at what you're doing and stuff, it appears, at least, correct me if I'm wrong, that you kind of transition more into the commercial, multifamily, raising capital, like kind of the big boy, you know, landscape of real estate, if you will, right? Why that over the single family residential, you know, type of game?
Yeah, I think that I just started getting curious. Mm-hmm. So I had owned a flooring company, and we provided flooring for the largest REITs across the United States.
Okay.
So we had 13 branches in 8 different states, and we were just chasing these big guys, Invitation Homes, Zillow, American Homes for Rent, all these guys. And we just started thinking, man, like these guys have 100,000 doors in their portfolio,
mm-hmm.
and that's great. But that is nothing compared to rental homes in the United States.
Mm.
So we started looking, it's like, no, the majority of rental homes are owned by people like my dad.
Yeah.
That own 2 to 12 rental properties.
Mm-hmm.
It's like, how do we get to them? Well, that was difficult. How do we track all of these people down? And then, you know, and so we thought, okay, like along those lines, maybe we should start a multifamily division.
Mm.
And so I went and started our multifamily division, hired sales reps, and then we would have this hang up when we go pitch someone. They would say, whoever we'd speak to at the property would say, well, I need to check with the ownership group.
Mm.
It's like, ownership group? Like plainly put, I just thought whoever owned apartment complexes were a bunch of like rich old white guys.
Right.
Like I didn't like ownership groups. Like, huh. And I just started asking like more and more and more. And then one of my buddies had a multifamily education company.
Mm-hmm.
And so I just got curious around like what he was teaching. And that's when I was open up to how to acquire larger assets. And what I found is it wasn't just one person that owned these assets, that it was usually a group of people. And someone was in charge of pulling that group of people together and raising the capital to buy them. And they could do it through sweat equity or put their own capital into it. They could have an LP and a GP position in these deals. Mm-hmm. And I really just felt like, hey, this is what I'm supposed to be doing. I love real estate. But more importantly, I believe that I've developed a network that I can go and raise large amounts of capital to acquire these assets. Mm-hmm. And then once I found out how multifamily works compared to single family residential, yeah, listen, I don't have a position on if, you know, you're doing that's wrong. You should be doing this. I was just really attracted to some of the differences.
Mm.
Yeah.
Yeah. But you mean the scale in which you can, you know, get to the next level and acquire doors is significantly easier, right?
Yeah.
I mean, it's kind of like, you know, for everybody who knows Grant Cardone, right? It's his whole thing, you know, like, hey, why have 500 roofs that are all in different locations when you can have 500 doors under one roof?
Yeah.
You know,
if you go back to maybe like a little bit of PTSD,
mm-hmm.
man, I was really just praying that my tenants on that first property just wanted to stay and didn't lose their job and paid their rent.
You have 100% vacancy.
Yeah, and I'm just too young. You know, I don't want to take on an extra mortgage or whatever that may be. And so you could have a 200 unit property and you might have 80 vacancies as you're going through a reposition
mm-hmm.
and still be cash flow positive.
Sure. Yeah, which is a wild thought to think about, you know. Yeah, the game is just different. That's all, really.
Yeah.
I mean, when you talk to people, you know, I've had Zach Haptonstall on the podcast with Rise 48 Capital. I mean, they're doing some pretty cool stuff. I've watched a lot of Ken McElroy I've watched a lot of his stuff, obviously Grant Cardone. So is that kind of, so when you look at what you're building now, you know, where would you fit into that in terms of like, cause there's a lot of ways to go about, correct me if I'm wrong, when you go and you know, like you bought, so for the last 18 months, maybe we just talk about this, you've closed on 500 doors. How many deals was that? And are you syndicating? What are the structure of those deals that you're doing, and how does that look and feel?
Yeah, so 4 deals. And where that fits in my grand scheme of things, have you heard the concept of if you want to maybe hit it big, you bet big on a smaller opportunity, but if you want to maintain wealth, that you bet small on a lot of different opportunities?
Yep.
That's where multifamily fits in my holdings. What I've found is that when I sit down with a client or a potential client and I start educating them on alternative investments, because that's my business model is an education-based sale.
Sure.
It's like, hey, listen, did you know that this existed? Did you know that you're eligible to participate in this type of deal? Let me tell you why we're considering this deal or why we acquired this deal. Does that align for you? And if it does, would you like to join us? What I found is that multifamily aligns for the majority once they understand how it works. And I think a lot of it happens in control.
Yeah.
You know, it's the valuation is super attractive to me in multifamily. They don't go off the comparable method or comps.
Yep.
They're not looking at, I tell the story about someone on my mom's street. So my sister and my mom live on the same street. And someone on their street gave the hometown discount to their grandkid. You know, and they just, you know, they wanted to hook their grandkid up.
Yeah.
Well, what does that do to the value of my mom and my sister's home? Right? Yeah, it brings it down. Well, in multifamily, they don't base off the comparable method. They base off of it like a business. What's your rent and what's your occupancy and what's the last 12 months history? What's it telling you? And that's how we can establish the value. And I look at that as being able to be in control of that. Not overcharging rent, making it a good place to live, where people, you know, an attractive place to live, treating them good, where they feel safe, those kind of things. And I can be have some form of control in that.
Sure.
You know, and I like that, you know, you'll understand this as well as anyone. Over the last few years, we've hit all-time high in residential real estate.
Sure.
Right. So what does that cause from a buyer's aspect? You get a newlywed, let's call them mid-20s. They just get married. They want to buy their first home. Well, they go look at housing prices, and it's like, man, I can't afford the down payment.
Yeah.
So what do they got to do?
Rent.
Yeah, they got to rent. And some for that trickles into apartment complexes most likely. Okay, well, the housing prices drop a little bit, but where are interest rates?
Sky high.
Yeah, so it's like, okay, I can afford the down payment, but I can't afford the monthly now.
Yeah.
So what do they got to do? They've got to rent. Okay, well, what happened in 2008? Everyone crashed, and there's a likelihood that most people we know someone that lost everything inside of the crash.
Yeah.
Well, why did they do that? It's because they had some form of non-recourse loans, and when they lost everything and filed for some sort of bankruptcy, what did they have to do to get back on their feet? Yeah, they had to go rent to go and do that. So I really like the economics of, in the highest of highs, there's some sort of funnel towards apartment complex, and the lowest of lows, people go there. So I believe that as long as I am investing or placing capital for others, that multifamily or real estate in general, but specifically multifamily, will be a part of it, because the data suggests that that gives people the most warm and fuzzies, or what I call the sleep well at night factor. It's like, man, if we have a portion of our portfolio that is exposed to the multifamily asset class, you know, people are going to feel good about their holdings.
Sure. Yeah. Hey, real quick, I'm calling all my Arizona people out there. If you have scorpions, mosquitoes, bed bugs, termites, rodents, anything you probably saw, but I started a company called Nectar Pest Control, and I would love your support. We're also doing an exclusive limited time only offer for our Founders 500K. Our first 500 people who join will get an insane discount and a bunch of other really cool perks. So I would love your support. All you got to do is click the link down below. Don't wait, because these perks will run out when we get to that 500 people mark. I appreciate you as always, and let's get back to the video. So when did you start the placement fund? And, you know, what does that look like? What does it entail? Is it accredited, non-accredited? Like, give me the you know, the nitty gritty, I guess, of that fund.
Yeah. So we're coming up on our 4-year anniversary. We're about 3.5 years in. And really, if you don't mind, if I kind of go backwards a little bit, I just had an exit in a company, and I was really looking for where I was going to go make my mark. I had found that I wasn't worried about creating income.
Mm-hmm.
So I was never like, I just had this confidence that I could go create a lifestyle that my family was not going to need for much. But I was looking for like, what am I going to be known for? Like, what do I actually want to do? What should I be doing? When I went into the flooring company, I didn't love flooring.
Yeah.
When I invested into that, and that turned into more of like, it engulfed me. When I thought originally it might turn into an investment, like I really was in the day to day. It's like, what do I really want to do? And so I occurred for myself as a connector.
Mm-hmm.
Like I believe that if you called me and needed anything, period, that I could find it for you or help you get to wherever you're trying to go. Alex Hormozi explains like a couple ways of investing.
Sure.
He says you could take your money and you can bet on other people's companies. You can take other people's money and bet on, have them bet on your company. And that was attractive for a little bit. Like, man, I'm going to start a company. I think I have enough of a network to, use my money and other people's money and really scale at a high pace. And then I saw you can take other people's money and bet on others people's company. And when you're searching for alignment, you want to find, at least in I had this belief system that you want to find where you can provide the most value.
Right.
And if I occur for myself as a networker, what better value can I bring to people that have capital, that may not know where to place it, and people that have these great deals or the great potential for deals, but need capital. And when you take other people's money and bet on other people's company, aka a fund manager, once I saw that like just ultimate alignment, that felt like, man, that is exactly what I want to be doing forever, you know? And that's where the placement funds were born. I had this wonderful mentor. I had a long-term relationship. We met playing pickup basketball, and he'd created this wonderful business. We'd done some prior business previously, and I knew that he'd created something pretty great. I mean, in like a period of 7 years,
wow,
he had, we'll call it this, pulled $100 million together and turned it into $700 million. And so obviously that was attractive, and he was him and his partners and their team were incredibly gracious enough to just take us under their wing and literally allow us to white label and show us the ropes.
Wow. And
so that's where the placement fund came. We started out saying, hey, we believe in compounding interest. Like, let's just not muddy the waters or anything. I want to be able to give someone an investment opportunity that they could understand. My 9-year-old daughter could explain it to you. If you place capital with us, we're going to buy these types of assets, and we're going to give you a fixed 10% compounded annual return. We're going to do it for a 4-year period, and you can choose to renew. We found a niche inside of where it was really attractive to people. And that same, if going back to that venture we spoke about earlier, it really aligned for people that had 401ks, former 401ks. We could self-direct them. They can now diversify. Just a standard W-2 employee could now be contributing to their current 401k and getting some sort of match and having exposure to the stock market. But they could take that former 401k, and now it was eligible at a non-taxable event to self-direct it into into a self-directed IRA and buy real estate or invest in a real estate focused fund, and then get a fixed amount of return that they can count on. So you get a 42-year-old that's got $300,000. We're going to go teach them the rule of 72. Hey, this money at 10% compounded is going to double every 7.2 years. You don't have access to it till you're 59 and a half. How many doubles are we going to get out? And we can show them the math and a path to turn $300,000 into whatever it is, $1 million, let's call it, by the time that they retire. And it's like, well, is $1 million enough to retire on? And if the answer is no, well, we've got 16 years left to keep contributing to that former 401k, possibly look at other alternative investments, short-term rentals, residential real estate, crypto, whatever it is. But you can kind of diversify inside of this plan where you're not just in, a traditional stock market holding.
Sure. Yeah, it's incredible. No, I love that. And then accredited or non-accredited?
Yeah, so we've got a 506B, which I'm a little bit more free to speak about. And then we also have a 506C, and we have something that we're pretty excited about. So the majority of these type of investments are aligned for accredited investors. Period. I went and filed for a Reg A Plus, and anyone that knows much about the fund, like that allows anyone to come in. Yeah. Our business model doesn't really align to open that up yet, although we've done all the back end work to have that if we ever choose to. Right now, I'm just on an educational mission.
Sure.
2 parts. We spoke about the Million Ways to Make $1 Million podcast. The real design for that is to help people that are not yet accredited get to accreditation.
Yeah.
Period. Because once you get to that sweet spot, really the amount of opportunities are endless, but you got to get there. And it's unfortunate. I speak about this half the week I'm for it and half the week I'm not for it.
Yeah.
You know, half the week it's like, I understand why they're not allowing you to participate in these, what I'll call the same deals the ultra wealthy are doing. Well, because, you know, that's, if you go and put all your eggs in this one bet or this one basket,
right?
You know, if it doesn't go well, it's not good for you. And the other part where it's like, man, this is absolute crap.
Yeah.
Like, how are the middle class or the lower class or the lower middle class ever supposed to evolve or get to where they want if they don't have access to the best kind of deals?
Sure.
Or let me rephrase that. Best is subjective. Have options to buy these type of deals, invest in companies, invest in large asset classes. You know, this building, for instance, someone owns this building. It's like, if you're not accredited, there's a real likelihood that you just can't participate in these kind of things. And even then, if you aren't accredited and you kind of get through some of the loopholes of being a sophisticated investor and maybe knowing the manager and having a relationship with them to be able to participate, like that involves you having to do a lot of work to go and network with the right people and kind of get around those, I don't want to call them loopholes because they're loud, but you know, it takes some different work. So the podcast is to help people get accredited. And then the informational series we're doing at the Placement Fund is to help accredited investors get to wherever they're trying to go around retirement.
I love that. Yeah. For people who may be watching who don't know what it would take to get accredited, can you, in layman's terms, as if you were talking to a 5th grader, explain how a person gets accredited?
Yeah. So to be an accredited investor, currently the qualifications are, if you're single, you need to have earned $200,000 or more in personal income over the past couple of years, or have $1 million net worth, not including your primary residence. So you can't include the equity in your house, which is unfortunate because, man, that could help a lot of people out.
So many people have so much equity.
Gosh, man, if we could just go get an appraisal and get with your CPA and get an accreditation letter, man, I think that would be amazing.
Yeah.
Or if you're married, it jumps up another 100,000. So that number's like that's 300,000. Still the same $1 million net worth part of it. So, you know, you get some business owners that might be able to get there, but the layman's terms is $200,000 to $300,000 in income or $1 million net worth, not including your primary residence.
Yeah, I think, you know, you teach people how to do that, right? I mean, in today's day and age, you know, I mean, literally, there's a million ways to get there, right? Like, $200,000 to $300,000. I mean, yeah, it's a lot of money, but at the same time, like, I mean, even if somebody's making $100,000 at their job, and then they go and they figure out a side hustle, or they start maybe something on the side, something on the weekends or whatever, like them, you know, him and his wife do something together. I mean, you can make up that other $100,000, you know, or $200,000, right? I mean, it's not that difficult. I mean, it takes time, but like at the same time, like anybody can do it if they choose to.
Yeah. Right? I don't spend much time on it's easy or it's more difficult or whatever it may be. What I do have a real fundamental belief in is that it is as accessible today as it's ever been.
Sure.
It's just up to you. I mean, man, the education, you just had Brian on your show. It's one of your most recent releases. Like his mission on helping people that it aligns for them to take that entrepreneurial jump is amazing. Like you can go get free content all over to learn how to do a side hustle or whatever it may be. But to get to that qualification, like for our guest, the reason I chose that benchmark of $1 million of personal income as a guest is because if they shoot for that, they could at least at minimum get to accreditation down at the $200,000 and $300,000 level. And that's why we chose the $1 million. But yeah, you can choose, you know, I won't argue with anyone that says it's as easy as ever or, you know, whatever it may be. But man, I'd find it hard pressed for somebody to tell me that it's not as accessible as it's ever been. Yeah.
I totally agree. Going back to the placement fund a little bit and some of these deals that you've acquired, obviously we're in Arizona right now. You live in Arizona. I live here. How many of these deals are here versus, you know, around the country?
Yeah, so we have exposure to a couple things in Arizona, not traditionally what we spoke about. A development that's going to be mixed use, So it's going to have some multifamily and those kind of things, but that hasn't broken ground just yet.
Okay.
Everything else is out of state right now.
Really?
Yeah.
And any particular part of the country that you really like or focus on? Like, are we talking Midwest? I mean, like what part of the country do you like?
Well, I'm not the most political person, but I do pay attention to which states are more business friendly.
Sure.
And so I don't love to say, hey, I'm Midwest focused, I'm East Coast focused, I'm Arizona focused, because my job and where I bring the most value is deals, period.
Right.
And so if someone heard on this platform that I was only interested in deals in the Midwest, they might not call me on this phenomenal deal in Tennessee or I guess, let me take that back. They might not call me on this great deal in Colorado or whatever it may be. So if I were to have like a qualifying factor, I lean way more heavy towards states that are business friendly.
Yeah. I think most people would agree to that.
Yeah.
I mean, almost anybody I've had on my podcast would tell you that.
Geez, there's so many people making money in California though.
Right.
Like I just, that personally aligns, but it's not a deal breaker either. I'd hate for somebody to have this great deal in California and, not call me on it. Yeah. But we'll look at it, but we're tiptoeing into that.
Sure. Of course. Yeah. I think it's smart, right? At the end of the day. And what I want to kind of talk about too is the market, right? Like the market, a lot of people out there over the last, I'd say 2022 to really present day, right? Like it's been an interesting market. You hear a lot of real estate people that aren't doing well, or they haven't been doing well in a couple of years now. Interest rates are too high to make sense of a deal. The debt service on the deal doesn't, when you are doing your numbers, like you can't make sense of it because you're not cash flow positive, or you're barely break even, or maybe you're even negative. How have you been able to navigate that landscape, and like what has it the last couple of years been like, and has it affected you?
Yeah, so this is maybe one of the most attractive parts to this type of platform of raising capital via a fund, is that what I found is that the golden rule, my mom actually made a license plate in Arizona called the golden rule on it, which is treat others how you wish to be treated. Yep. The other side of that is he who has the gold makes the rules. Man, there's a real option for, if people believe that you have the ability to fund something at a high level, you turn into Shark Tank and all sorts of different opportunities come to you. Where that's beneficial today, or where it has been over the past couple of years, is that if interest rates or pricing isn't in your favor, how you acquire a deal or how you get creative in acquiring a deal can be. So like in the last deal that we did, we assumed a loan at 3.2%. It's like, okay, well that changes everything. Rather than having it be at 5.8%, let alone 7% or whatever it may be, it's how you acquire it. And if you have the ability to pull capital together in large sums, now you can go in and I don't love it as a whole, but it is what it is. Or you call it kind of a somber excitement, is that there's a lot of deals in a lot of trouble right now. Right. And if you can go in and bail them out from the bank taking it out, but get it at a favorable rate, the deal can be really, really solid. Let alone if you have the capital and you can have bank relationships, you can go acquire deals that they've taken back and they need to get off their balance sheet, and you can still get it at a discount. And so I would think that when you get to scale, or you have the ability to fund in large sums, there's just more opportunities out there. Yeah. And unfortunately, like some of the good deals are going to be because other people got in some trouble, and some to their fault, and some to things that they just didn't have the crystal ball on. Cost of goods, cost of services skyrocketing, interest rates skyrocketing. And man, a lot of people in the multifamily space did those 3-year bridge loans. Yeah. Would you say that's the number one thing that got people in trouble? No. What's the number one thing? I think it's number 2. What's number 1? Operations. Not having the right team. Yeah, just operating the deal poorly. Yeah, the deals can get super attractive. And so you could get what thinks and feels like a turnkey project, and they're really just not. There's a lot that goes into managing a 200-unit apartment complex. And although you might not directly be doing it, who you've chosen to do that is as important as anything.
Sure.
And so if you've got a property management company that is misallocating funds, that isn't on top of their game, that isn't running like a functional company, that has turnover, and therefore they're not helping you lease, and they're overspending on maintenance because it's easier, and people are just coming and giving random bids, and they're not getting second and third bids, and then your CapEx budget goes out the window. Like everything goes around who is operating that property, just like any good functioning business, because that is a business. It's getting evaluated as a business. The other parts that didn't make that person's job easier is the cost of goods, cost of labor, interest rates, the other things. And it was just a bad storm that's come around. But I think that number one thing that we'll always look at in vetting is who can be our operating partner, because that's what's going to make the world go round in the deals.
I like that. I know that you probably would look at any deal, like you mentioned a minute ago. You would obviously look at anything, right? You have a preference as to the areas and the deals, I'm sure. But if you had your perfect buy box, like what would it be, right? If it's like, hey, I don't like deals smaller than 50 units, or hey, 100 unit minimum, or class A, class B, class C, what types of areas, like not necessarily like states, but like, is it, hey, lower to middle income areas? Is it like, for example, like Zach Haptonstall has been here, right? I'm sure you've met him. And he's really focused on like class C multifamily, right? That maybe he can turn into like a class B multifamily, but it's not Grant Cardone class A multifamily. Like he's not buying the Optima, right? He's buying, just a different type of deal. Is there types of deals that you really like that is like your sweet spot?
Speaking in the real estate multifamily realm, man, Zach's onto something. From the sweet spot could be if you could get a C property in a B area.
Yeah, right. There
right.
You go.
And oftentimes it's only a C property because it was mismanaged, or just like it's just been steady Eddie for so long that it hasn't required much thought. Or someone bought it 25 years ago. They might be a single owner, or a group might have bought it, and it's just performed. And so it hasn't been renovated. It needs the roofs. It needs the improvement. They haven't raised rents appropriately because why ruffle the feathers? Or, hey, we haven't fixed it up in a while, so we can't really justify hiking up the rent $250, or a unit or whatever it may be. And it's like, hey, you guys looking for an exit? You've had this for a long time. You're getting a little older. The kids might not want it, or whatever it may be. They're looking for a payday, and like there's a really great sweet spot there.
Yeah,
there's so much meat on the bone. And if it's in a B area, or right around there, you can really justify a real opportunity there.
No, I like that. It goes back to you flipping cars, right? What we were talking about in the beginning of the podcast. Class C property in a B area. It you can see it's obvious what you can do to increase the value of the property, right? Like I think those are the best deals when you can look at a deal and you're like, dude, this is a no-brainer. Right. Like we just need to renovate, we need to add a washer dryer over here. We need to do, we need to put palm trees. We need to redo the landscape. It needs to be painted, and then you can go and you can start raising the rents, and you can, increase the value of the property.
Yeah.
Right?
And justifiably so. Like I'd hate for it to look at, and some people could be like, oh, my rents were increased. If you can do it value driven,
right,
it's a whole different story.
Totally.
Hey, listen, Austin, you've been in this unit now for 3.5 years. I noticed that, we have a laundromat, but your unit is wired for a washer and dryer. Would you appreciate it if we put a washer and dryer in your unit? Well, of course.
Right.
Well, what if we turn the laundromat into a gym? Would you like to have a gym on campus? Oh, yeah, that'd be great. Hey, I noticed that, the dumpsters are in the back of the complex. How would you like, rather than to have to go and drive with your arm out the window or throw it in your trunk or whatever you're doing. How would you like to just set your trash out on Wednesdays and Saturdays? And we'll have someone come pick it up for you.
Right.
Yeah. And we're thinking about repainting everything and just give it a little bit of glow. If we did that, would you be up for paying an extra $230 a month? And oftentimes that aligns for people. Let's say it aligns for 70% of the community, and you're not really pulling each tenant, but as a whole, like this is the message.
Yep.
Well, man, if you can go increase 252 doors by $230 a month, now what you're doing on a trailing 12 months and your occupancy is at 92%, man, you can turn a really great profit in, a 3 to 5 year period.
Yeah. I noticed that you had filled out and you had put, paperwork being an issue, right? Like in some of the deals that you've missed out on or maybe even lost money on. I think paperwork scares the majority of people, like even at a small scale, right? Like let's just take wholesaling, okay? The lowest barrier of entry to real estate, in my opinion, right, is wholesaling a piece of property, okay? Paperwork, I would argue, is the number one reason people don't start, right? Because for whatever reason, just the idea, the thought of the paperwork, of like filling out the contract, like logistically getting out the pen or the DocuSign and like filling out or writing or drafting that contract scares the hell out of people. Like people just, it's way over their head and it's paralysis analysis, like they never get started, right? Now at your scale, buying big multifamilies, raising capital, obviously following the guidelines of the SEC and all of the different variables that go into that. What are some struggles or barriers that you've had to overcome in terms of getting good at paperwork and understanding the paperwork and being able to read the damn paperwork and knowing what the hell it's talking about? Like how have you navigated that landscape?
Yeah, my personality is one of an optimist.
Mm-hmm.
I believe that if you and I spoke about something, that we could go do a deal together.
Yep.
And there's enough to go around, and the people I want to do business with have the same mentality. Well, unfortunately, that's not the case.
Mm-hmm.
And if you don't have paperwork, the right paperwork, paperwork in general, you're just really exposed.
Mm-hmm.
Just any sort of formal documentation around a deal, you're just exposed. And now there's another level of, is it qualified paperwork? Is it paperwork that is in your advantage? You see these sales happen in these companies, and man, the fine print can really change what you felt like you signed on.
Right.
And I think that it goes around surrounding yourself with people like that have the right strengths. It's like, I went and put this deal together, and we put the handshake together. Well, who do you have in your corner that is capable to do the right kind of paperwork that will not only protect you, but also be able to explain it in a way, or translate in a way that says, yes, this deal is indeed what you believe it is, right, and now you can go and sign. And, it's expensive. Like, attorneys aren't what I'd call, like you're saying, in a barrier entry, especially if someone's looking to just get started. It might look at like a real cost.
Yeah.
I've got two buddies that sold companies. One I think spent like $68,000 on their attorney to help them draft the deal, and we're talking $40 million plus types of deals.
Yep.
And another person spent over $400,000 for the same service.
Wow.
And it's like, well, yeah, but why would you do that?
Mm-hmm.
It's because when you're dealing in these type of deals, I believe it's so imperative to know what you're signing.
Yeah.
And so you're just not blindsided, because it can just be so deflating
Mm-hmm.
when you believe that you're going to get this, you end up getting that,
Mm-hmm.
and you're just like, if you could have just had some, like, the right team helping you draft and navigating capital stacks and A-class and B-class shares, or reimbursements, or where you're at in line in the deal, or whatever it may be. If there's like a message that, like, I've taken my lumps on, it was a little bit too many handshake deals.
Mm-hmm.
And, none that have been like, taking my kneecaps out.
Right.
But like real kick in the balls. Like
Yeah.
real just like, damn.
Yeah.
Like.
What the hell?
Yeah.
Yeah, for sure. Yeah. And was that just a lack of not having paperwork at all? Like, what would you say?
No, education.
Yeah.
I didn't come from like a finance degree or whatever it may be. It was just networking, and it was just like, hey, I'm putting this deal together. Who would you refer? You refer me an attorney. The attorney drafts the paperwork, and it's like, well, I trust Austin, but I didn't really vet the attorney.
Right.
And then the attorney forgot to put this, and this in the deal, and then the deal's coming to a close, or you have an opportunity to sell it, and you look at it and you're like, wait, I thought we were gonna make this, and we only made that, and and so I think that something that I've learned is that there's more than just vetting the deal.
Mm-hmm.
There's a deal that went sour because we vetted the deal, and I was kind of on the outside of the circle, but I saw it firsthand what
Sure.
had happened. Is that this group vetted the deal, and I even helped vet the deal because some of the important players in the deal were some of my clients.
Okay.
The deal checked out. If we would have vetted the team, it would have we wouldn't have had to vet the deal.
Yeah.
And it's just because of what their track record was in that specific domain.
Mm-hmm.
The deal just would have never happened. And so I think that you gotta vet both. You gotta vet the deal and the team separately, non-biased. And sometimes the deal could look so juicy, and I just don't think that there's a good enough deal on the planet to have a bad partner.
Mm-hmm.
And I think you'll sleep well at night when you have a team that you're partnered up with, where you just align, you're on the same page, you've had the difficult conversations. I had a friend on the pod, and he referenced this, I believe it was a book that said only the paranoid survive.
Yeah.
But he just has these tough conversations up front. Like, hey, Austin, I don't think you're going to screw me, but can we pretend as if I did?
Yeah.
Can I ask you a few hard questions on where I'm exposed in this deal and this deal and this deal? And listen, if the deal's meant to be what it's meant to be, you don't see the other person on the other side of the table taking offense.
No.
Oh yeah, and if you can have a little bit of humility in saying, I don't fully understand how this operates. Can you help me?
Right.
This is what I'm nervous about. This is a lot of money for me. I have a lot on the line for this. Can you teach me where I could da-da-da-da-da? You take notes, you get with the right team. But as a whole, man, I think that I don't spend a whole lot of time living in regret, but there's a couple I wish I had back.
Yeah.
And I think that the right paperwork could have helped with that.
For sure. What about commercial, like the building that we're in right now? Do you like it? What is your opinion on it?
Yeah, I love it. I don't know enough of the market trend. Like in my mind right now, there was a time where I was like, oh, hey, everyone's going remote.
Yeah.
Robots, da-da-da-da. Like, I don't know if that's the right spot. But I think that there's going to always be a need for some form of building of this stature.
Yeah.
Yeah, and
I agree.
And I would love to own it. I would love to add it. We don't own any commercial buildings right now, but I would love to add the right building there.
Same. Yeah, I would too. I need to buy a building.
Yeah.
For us, just for my companies that we own.
Oh, that's where it can get really fun. When you can go and arbitrage and be your own anchor tenant, and then have everyone else paying your rent, and you can take the depreciation and it could get real fun that way. And then the valuation, same thing. Right?
Yeah.
You can go and if you can go find a good deal that might only be 70% occupied. It's like, well, I'll fix that. I'll take the other 30%, or whatever. Or you have the connections to fill the other 30%, and you can get that valuation. Now your company has no more rent, and you can sell it for a profit a few years down the road and get your own spot or whatever. It can get really fun that way.
Yeah, we're going to do it for sure. 2026, we're going to do it.
Yeah.
Yeah, because we pay a lot of money in rent.
Oh, it's wild right now.
Yeah. It is. It's pretty crazy, actually. Obviously, you got to do it. A lot of the big guys that we've been talking about, they rented their place. It's just but if you can, you got to get to a point where you can buy the deal, buy the unit. So it's a big goal of ours.
I'm a fan of what you're doing here. Although the price tag, I've not looked at any comps. I believe that this is not a cheap place by any way, shape, or form. There's something in a pay-to-play portion of business that I have a belief in, where you can look at something as an asset.
Right.
Like the feeling I get in walking into your building in a set like this and all those kind of things gives me some form of a confidence in you. You know, and I don't know. There's some real momentum there.
Yeah.
And sometimes I think that people get caught up in what it costs. It's like, this is just rent. It's just out the window. It's just out the window. It's like, man, I don't, I've found success in looking at how can I justify an expense like that, or a little bit of a game of motivation. Like, all right, hey, if I'm going to sign on the dotted line and pay monthly on an expense like this, how can I go outperform it?
Yeah.
And there's some cool momentum. Jesse Itzler has a pretty cool story about some tickets that he bought.
Really?
He didn't have the money to buy these Yankee tickets, and then he ended up buying these tickets, and as a result, who he was networking, and it evolved into his largest investment deal that he did. Like, there's real momentum.
Yeah.
I think a lot of people could have looked at those tickets and been like, man.
I agree, man.
Sorry, I can't buy. I don't have the money today.
I agree totally. I think that there's actually been a lot of times in my life where I bought or, invested, maybe we'll call it, into things that probably it was too soon. Like if you looked at like the timeline, but it was like, it was in front of me when it was in front of me. And it was like, wasn't my fault that it was too soon or too early. Right. And I just took action and I did it and just bet on myself. And it's always worked out for me, you know. It's never not worked out. Like we've always grown into it. Anytime I've ever like gone and gotten office space, like for example, I always get like pretty significantly more than we need at the time. Just betting on the fact that I'm going to fill it, right? And sure enough, dude, we've filled all of our spots, you know.
It hurts early.
Yeah, it does.
It hurts. You're looking at empty desks and space and the TI to build out stuff that you're not even going to use today.
Yeah.
You know, some of those kind of things. But man, there's a real magic in, I don't know if I'd quite call it burning the boats, you know, but, you know, growing into, you know, in football, they call it like throwing your receiver open. You know, it's like, doesn't mean that they just got open. Like sometimes a good quarterback can throw them open. Yeah. And there's some magic in business. It can be a slippery slope. Like there's a real fine line there, but man, when you can do it intentionally, I think it can create a lot of momentum.
Yeah. You got to know. I mean, you got to know with certainty that you're going to make it happen, you know? Yeah. Let's talk a little bit about businesses, right? Because we're kind of on the subject, you know, you're an investor in quite a few of them. Like, I feel like it's two different arenas. They're similar, right? You have your, you know, the placement fund is all focused on, you know, raising capital, buying real estate, right? Like big deals. And then you've got this other kind of area of your entrepreneurial life where you're investing into companies. You're investing really into people, I would argue, right? The people behind the companies maybe, you know, but ultimately the company and the people. And so what I'm sure you don't have like a preference, but what are the pros, the cons, the differences, you know, when you go invest in a Green Mango versus you go and you raise capital and you buy a 200 unit apartment complex? Like talk to me about that.
So one, that's something I'm really proud of, is our fund allows to buy both.
Okay, cool.
And so oftentimes funds are centrally, you know, focused on, like it might be a multifamily fund. You talked about Zaback or Rise 48. To my knowledge, when you put money into their fund, it goes or into a syndication like that is specifically, that is what it is.
It is. Yep.
I want to give appropriate exposure to whatever I can because I want to buy opportunities. I don't want to get stuck. You know, in the crash or in crashes, oftentimes people can get smacked because they're stuck on the track and the train's coming and their PPM or their private placement memorandum, their documents, their legal SEC governed documents don't allow them to step off the tracks. I want fluidity. And if it makes sense to buy multifamily right now and there's such a good deal, let's double down, let's hammer it.
Sure.
But if there's a time where it's not and it gets a little hairy and it makes more sense for us to stack cash and wait for opportunities and you know, we might not want to sit on cash and there's a deal like Green Mango that pops up in the meantime. I want to be able to go and turn a profit where it makes the most sense. So in the fund, we have the freedom to do both.
That's awesome. Yeah. And just under 12 companies you've invested in?
Yeah, it gets a little like unclear. We placed a pretty sizable investment into another private equity company. Okay. And then they're exposed to a lot more.
Right. So it's like,
how do you kind of like an arm's reach deal where that number could be a lot bigger because of our exposure through them. But yeah, what we're looking for right now is, you're right, you're betting on the horse. And I am still in a scale mode, and I still have this kind of foundation or fundamental belief that real estate helps keep it and secure. It's your steady Eddie, you know, and there's options to, you know, generate a profit. I think that you can get to $100 million in real estate. Like that's a really attainable goal. I think it's really hard to get to $1 billion in real estate. I think that's where companies come in. Yeah. When you start learning about EBITDA evaluations or EBITDA stacking or how you can increase and combine companies together, it's really pretty. There is something that there's this, I haven't gone upstream to find like the real work, but man, what my mentor and some mentors have done for me, like, geez, I want to do that for some other people and bet on them, like, and bet on the right horse. And I think some really great returns can happen from that. And now it's just vetting people in the right deals and the right opportunities. There's so many great companies. The Green Mango one, perfect example. That was so unique. You know, like I was instrumental in developing the relationship between the two founders of that company.
Sure.
So I saw it from conception to where it was, where there was an opportunity to now write the largest check I'd ever written, you know, into a company. It's like, man, that would have sucked to not been able to participate in that, you know, when it came about. And what I was really doing is I was betting on a visionary and one of the greatest artists I've ever met and one of the most disciplined robot humans I've ever met that had established this great company, and it still had some work to do, but there was a vision and a path. Cameron had this vision for what was going on. Dusty had rode the ride and he created that vision. Man, like it would have really, you know, it would really suck to be able to have to pass on that because of some sort of restrictions. But I loved betting on somebody that I just believed in, you know, and then, you know, connect and help wherever you can along the way. But that's the business parts that I enjoy. And don't discriminate. I mean, right now, I think I told you that I own the coolest paint in the world right now.
Yeah. Talk to me about that.
It's just like this brilliant idea where they could take, I'll use loose numbers. Let me paraphrase with loose. But let's say that this building right here on top of the roof today, it reaches 160 degrees temperature up on the roof.
Okay.
You could put this paint on it and bring it down into the 90s. And what that does from an impact of AC bills, those kind of things, it's pretty amazing.
It's literally the coolest paint in the world.
The coolest, yes.
Yeah,
not
that
like
just kind of dawned on me just now.
It's like, think of like a rash guard.
Yeah.
And so right now we're launching with Amazon, and Amazon's having us paint some distribution centers over in Europe. There's Florida is asking us to paint some things. Barbados is working on a project where they want the paint. Where it could be really valuable to a company like Amazon is Amazon owns thousands and thousands of shipping containers.
Sure.
And when you have electronics sitting out on the water and bright heat, if you could do something to cool down those shipping containers and protect inventory, there's a real value there. So but like that's so random, and that's a little bit outside of our realm, you know, because we're not true venture. You know, that was a pre-revenue company that we decided to, but man, they had people like Amazon and their board, like what they'd built internally, and the guy that I was betting on, you know, just everything he'd done was, you know, had success to it, you know, those kind of things there. And it was just an opportunity that came. I was not looking for it. I certainly wasn't. And
probably I would imagine a lot of these opportunities that you've invested in are not opportunities that you seeked out, that they kind of fell into your lap. Yeah. I would imagine.
That is the most value that I bring, is connecting.
Right.
I think that for any client, if I can educate them on what is available and what's out there, and they want to come on this ride with us, what they can count on from me is that I will find opportunities all over the place. Man, a partner of ours that we wrote some pretty good checks on, they just got a real estate deal. It was just because of who they knew.
Right.
But they acquired a deal for so much less than I believe that they should have. Signed a 12-year tenant overnight. That money is that building's going to print for them for the foreseeable future.
Yeah.
That deal only came about because they were connected to the seller.
Wow.
And that's what I'm looking to do. I'm looking to go and make as many relationships as possible and shout from the rooftops, hey, if you need capital, call me. And if I don't have it, or I'm not in a position, or the timing's not right, let me see if I can help you find it. Because I want the phone to keep ringing and keep ringing and keep ringing.
What was the deal? What is it called? Cannon Beach?
Yeah.
Is that what it is?
Yeah.
Tell me about that deal.
Man, Cole's one of my favorite people. He is brilliant.
Cole
Cannon.
Okay.
Yep. So named the beach after him.
Yep.
There was this piece of property. I'm going to call it Gilbert.
Okay.
It's technically Mesa, but it's on Power and Warner.
Okay.
And to me, that's Gilbert.
How's that not
technically
Gilbert?
Across the street from Warner is Mesa.
Okay.
Mesa kind of loops around that way. And I'd known about this land. I'd known two other groups that had tried to acquire this piece of land, but it got caught up in a family trust, and it was messy. And a non-family member had worked their way into the deal and blah, 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 that no one could buy this prime piece of real estate.
Got it.
Cole's a genius, and he's an attorney by trade, and he figured out a way to acquire this 50 acres.
Wow.
Then someone came and pitched him on a surf park idea, and he got on board with it.
Wow.
Well, they were nearly $50 million into this $200 million project because they needed about $150 million more. And someone connected us on a group text.
Wow.
And I like just opened shop. Like this was brand new, no track record, no anything.
Yeah.
And Cole, bless his soul, pitched me like I was ready to write a $12.5 million check to him right then and there. And we left that meeting and it was just like, hey, how much do you need to finish the project?
Yeah.
He's like, 150 mil. And I said, well, what kind of value would it bring to you if I found the rest of it for you?
Right.
He looked at me like, you've got 150 mil? I'm like, no, I do not. But I really believe I could help you find it.
Yep.
You know, and that goes back to like the networking and that alignment of feeling like I could. And, you know, started making calls and helped them secure the majority of the capital for the rest of that project.
Wow.
Yeah.
Who are the types of people that invest into a project like that? Like the avatar. What's that avatar look like?
Yeah, so there could be other people like me that've got fund exposure.
Sure.
And then high net worth individuals or even accredited investors.
Sure.
But at that point, you know, Cole was piecing together $4 million at a time. And that could be one check writer, or that could be, you know, us four doing $1 million a piece as a group and coming in. But at that point, Cole was just willing it into existence.
Yeah.
And so he didn't care how he was going to raise it. He was doing it. What helps as much as anything is that deal was what I would deem as sexy. Most people will be like, the surf park, 200 mil, like that's a lot of tickets. That's a lot of surfboard sales.
Right.
It's like, no, that's 50 acres.
Yeah.
He chopped off 13 acres and sold it.
Got it.
For a profit that almost funded the majority of the other, 37 acres.
Yep.
Well, the surf park's only on 4 acres of that. That's a real estate play.
Yeah.
And that's a commercial real estate play. And it's sectioned off piece by piece by their restaurant row and all their other things. Like when you get into the, you know, under the hood or in that deal room, man, that deal looks super attractive. And now it becomes a real estate, you know, what's the verb? I heard it in experience-based real estate.
Right.
You know, and so like to his credit, like he did the things to be in line. He crossed his T's and dotted his I's from his, you know, the way his mind works around attorney and structure and deal flow. And then he went and created a really cool opportunity for people to participate in. So I feel very small in that, like that credit all goes to Cole and what he's done and the vision of Matt who brought the two together, you know, some of those kind of things. But that project's really rad. And I hope that stays around for a long time in Gilbert.
Have you surfed out there?
Yeah.
You did?
Yeah.
That's cool.
We would spend nights out there testing the wave.
No way.
And so he'd call and be like, hey, I'm at the wave. We're going to try this new wave. And it was just us, dirt lot, and half the pool. You know, like because we had to build out the concept. And once it was proved, then they knocked down the wall and expanded it to twice its size.
Got it.
But one of my favorite, like a couple of my favorite memories with my son are out at that park. It's just us. Cole and I did a half Ironman. You know, together we'd swim and train in the pool while it was filled up and that kind of stuff. So yeah, that's great.
Super cool. I got to get out there, man. How long have they officially been open to the public?
Man, it's got to be coming on 8 months. I would think.
Really?
I'm guessing.
And they have restaurants and stuff out there. Like it's a whole thing, right?
Food is awesome.
Really?
Yeah. Like you just want to go hang and like dip your feet in the sand, like go get a cabana, order food and watch the surfers and you'll have a good enough time.
Wow.
Let alone if you want to go jump off the, you know, the walls and the, you know, the platforms and go and learn how to surf. And they've got as far as I understand, the only non-connected to a body of water unit wave.
Really?
Which is like a standalone wave where you can practice getting familiar on a surfboard and carving back and forth, but the wave is continuous.
Interesting.
So you could stay on it as long as you can stay on your feet, right? And surf and just get comfortable on a surfboard and then work your way over into the lagoon.
Interesting.
Yeah.
That's really cool. And I mean, are there just regular people that go out there and surf?
Yeah.
Really?
Yeah, like that's what it's designed for. You have to think about the reps that you can get out there in that concept of half the battle is that you got to paddle out and get through waves and duck waves and all that kind of stuff, which is a real, you know, burn.
Yeah.
And then you're competing with other surfers. And so like if you're a newbie, you're an Arizona guy going to try and you're going to go to Salt Creek in California and try and compete with the locals. Like they don't love having you there as much and, you know, all that kind of stuff. Here it's like, oh, it's my turn. And you can have your turn every 4 to 6 minutes. Like you get your own uninterrupted wave and the amount of reps that you can get in there is cool. I think there's going to be an evolution. I think that we'll eventually have surf teams in Arizona from the high schools, you know, that kind of stuff.
That's
I think
super
it's
cool,
great.
man. Have you had any of the wake surfers out there yet? Like Connor Burns and any of these guys?
Yeah. So, what's his name? was it Kai that came out there?
Okay.
But they've got a bunch of cool content. You should go check it out. Cole and that team. Revel Surf is the surf company. People should go check out Revel Surf and go visit it. It's awesome.
I got to go out there too and just check it out and hang out.
Yeah, they had a
day.
wench out there too. Yeah. That pool, those guys were messing and they were dropping in from the side. You know,
OSHA,
cool. OSHA wouldn't approve of all that. Hopefully, sorry, Cole, but they were doing some unreal stuff out there. Yeah.
Yeah, that's cool, man. Let's talk a little bit about like your public speaking and kind of just, you know, some stuff on the personal side a little bit. You know, you talk about really enjoying public speaking. Like, what does that look like for you?
Yeah, I got asked to speak at a real estate event. They probably had close to 2,000 attendees, and I was the opening speaker of the event.
Mm-hmm.
And I haven't gone upstream to find out like what's giving that energy, but I am not your traditional, like if I was sitting with like a savage of a salesperson, that's not the right word because I don't want negative connotation towards sales. If I was sitting with a really experienced salesperson, they wouldn't love my style.
Sure.
Because it's so soft, but it's educational based. And I believe that if you can help enough people get what they want, what you want will come. And I just went and just taught whatever I was doing, like all of it. No hold back. This is exactly how I'm raising money. This is how I'm positioning it. This is who I'm reaching out to. This is my elevator pitch. And the feedback that I got from people and now seeing what's come of that, I will aspire to grow my skill set to be asked to do more of that at some way, shape, or form. I'm not looking to monetize on it from like a pay me to come speak on your stage, but like there was a real like selfish fulfillment of interacting with the people in attendance afterwards that I think I'll chase for a while.
That's super cool, man. Yeah. Public speaking is something that I eventually want to get into in a big way. I've just been building. I've been in build mode for so long, you know, that I'm just like, I say no to anything that isn't what I've got right in front of me. But that is always been a goal of mine, is to get up on stage and do more of that. And from what I understand, it's a lot of fun.
Yeah. I crave more simplicity and useful content. Right now, I think that there's a lot of like shots of adrenaline from stage. And I'm a big advocate of going to events and those kind of things. But, man, they can dwindle.
Yeah.
And inevitably, it's really the person that hears it and what they're going to go do to apply. But, man, there's some people that if they can find the balance of becoming good orators or good presenters and speakers, but have this use case of building all these businesses, like you'd be the person. Like you're comfortable enough behind the camera and you've got all of this knowledge. It's like, man, I'll push on you, but you're being selfish not to go and share it with the world, man. And rightfully so. There's a season for everything.
Yeah.
But when the right event coordinator can get you on the hook to get you on a stage, it's just going to be a benefit to everything around. And then there's the real networking. Like that event was in Florida. The amount of deal flow and phone calls I still from this day get, you know, for bridge lending, because that's something we're doing right now. Is that someone needs a loan to close. They've got to go and put $7 million together or $8 million together in 90 days, and they only raise 6.8 and they're $1.2 million short. Well, they could call us and we can lend them the $1.2 million to get to close and then give them a 60 or 90 day extension to go and raise the other $1.2 million.
Wow.
Like those are coming from that event. And so in the world of networking and as you're expanding nationally and tackling the things that you guys are tackling nationally to become, you might have already been there since our last conversation, but the number one wholesaler in the country, like that stuff I think will just add to it. You'll find great reps there. You'll find great team members. So
sure.
You should go get on some stages.
I know, dude. I'm going to. The day will come.
Yeah.
I know for a fact. I always like kind of finishing podcasts on like a personal level, right? You're a family man. You know, you're somebody who appears, you know, to have, I hate the word balance, but like, you know, it appears that you've figured out a way to juggle all the different things that you have going on in your life. What is your secret? What is your thing that you would give to people? It's the number one thing, by the way, James. I've had a lot of people on my podcast, as I'm sure you have also. A lot of very, very successful people have sat right where you're sitting. Billionaires and, you know, definitely people that are worth not multiple nine figures and everything kind of in between, right? And the number one commonality that I've seen is that there's a lot of addiction. There's a lot of infidelity. There's a lot of, you know, going so hard in the world of entrepreneurship that, you know, they've destroyed their marriages. They've They've destroyed their relationship with their kids. They've destroyed their health in a lot of ways. I've kind of seen it all. A lot of people have come on my show and been really transparent about the cost of entrepreneurship and what that's costed them, right? So something that I'm focused on at 30 years old, and I'm certainly not perfect, very far from it, but is trying to figure out a way where I can achieve all my wild ambitions and keep my marriage, have kids, have a six-pack at some point, again, right? And like do it all, right? How have you been able to navigate that landscape?
I learned from a coach that I'll give a lot of credit for, that I found his work, and the theme of it was intentionality. I've got a lot to figure out, as I imagine anyone would. But if I could say something that I'm really proud of, is my relationship with my kids is something I'm incredibly proud of. Like, I think if you had him here on this couch, like, the feedback would be what a father would want to hear.
Wow. That's super cool.
And that doesn't mean I'm there. I wasn't at breakfast with them this morning. I didn't see them on their way out to school this morning or anything like that. But what I found is that intentionality has compounded in a big way. And what my wife requested, and I'll give her this credit as well, she issued a challenge to me that stuck out. She just said, James, I want you to spend 10 minutes of uninterrupted time with each of our kids every day. No phone, none of the other kids, not me. Like, find a way to pull them aside and just be with them. And my coach has a quote that I love. He says, the greatest gift you can give to somebody is the gift of feeling heard. And what my wife has requested, and she said, James, I'd rather you stay at the office until 30 minutes before the kids have to go to bed and walk in the door, leave your phone in the car, whatever it may be, and be with us for 30 minutes than to come home at 4:00 in the afternoon and be there from 4 till bedtime glued to your phone.
Right.
And I think that you can just find that intentionality, whether it's your health, like you can find the time. Just don't be the guy that sits on the bench on your phone and multitasking and be at the gym for 2.5 hours.
Right.
Like, go get after it for 45 minutes and then get back to whatever you're doing. But I found that intentionally planning, you see a lot about like this weekly planning and just getting intentional with your calendar. Like, man, that's some of the best advice that I've been given.
Yeah.
Is that when you can scale out and place intentional time in your calendar, and that goes to date nights, that's whatever it may be. And what I found is the what doesn't matter as much. I shared this example recently. I did like a solo cast, and it was just like a huge eye opener. But I took the kids in the helicopter up to the top of the Superstition Mountains, and my daughter wanted to practice photography. So we got Dawson here. I said, Dawson, will you give her a lesson on photography and teach her? And then my son heard what we were doing. He wanted to come, and so we brought a bunch of golf balls, and he just smashed golf balls off the mountain.
Wow.
And I'm sitting here thinking, like, I'm the best.
Yeah, it's pretty freaking
What
cool.
other kids are on the helicopter? Listen, that day had no more impact on him than, do you want to go on a bike ride? Or the example I used with my daughter, which has like been our favorite date that we've done recently, is I think it costs like less than $10 to go to a 30-minute free skate at the ice rink.
Wow.
And it's just her and I. The conversation in the car on the way there. We're there for, I bet you from door to door, we weren't gone an hour. And like, whatever deposit that placed into her account and our relationship account is lasted months.
Yeah.
And so it's not what, like, you don't need a freaking helicopter. You don't need that stuff. It's the intentionality of putting specific time where they can feel you present, and then just being disciplined enough to, like, the world goes on. I let some phone calls go to voicemail, sometimes. And I found that I'd rather you have intentional focused version of me rather than a distracted version of me. And there's certainly times where you just got to do both. Like, you got to do it all as when you're getting things off the ground. But if I could preach from a soapbox. If people could find intentionality around whatever they're looking to seek upgrade in, like they'll find it.
Yeah, I like that a lot. James, it's been a phenomenal podcast.
Yeah.
Where can people find you?
Yeah, Jay McCabe is my Instagram handle. We are starting a financial series that will go on Instagram, and YouTube is where we're focused the most on. And I'm just going to start teaching people what's out there in the world of alternative investments.
Sure.
And
how do they find you on YouTube?
Yeah, so under A Million Ways to Make $1 Million, the podcast is where that's going out, and or James McCabe.
Okay. Cool. Awesome. And I'll link all that information down in the description.
Yeah, I appreciate it.
Yeah, I appreciate you. And we'll definitely, I'm sure we'll do it again. I've had a lot of second and third timers on my podcast. I'm sure you'll be doing that as well. So we'll do it again, and we'll recap and then go even deeper.
Yeah, I mean, I can't say this enough. Austin, you are, I don't want to be cliche about it, but when someone's looking for, you wonder why this guy has success, like they just need to get your content. Man, I listened to 2 episodes, in the last 24 hours of yours. What you're doing in the form of whatever's necessary for success, not in like a desperate way, but like in an intentional way, like you're just willing to do it. Man, you've got, that's in my opinion, 80% of the battle. Yeah. It's just someone that's determined. So I appreciate your time. Your energy is contagious, and I appreciate it. So anytime you call, I'm answering.
Dude, I appreciate it. The feeling's mutual.
Yeah.
Hey, if you're still watching, if you're watching on Spotify, leave a 5-star review, comment down below. All of James's information will be in the description of every single platform, regardless of where you're watching. If you're on YouTube, make sure you subscribe, like if you haven't already, comment down below, and I look forward to seeing you in the next episode.